Circling lower by about 0.5% around the 15,230 mark. The broader markets, particularly the mid-caps, are showing you a lot more resilience. The PSU banks are really championing the growth today, while on the flip side, the Nifty Bank Index, along with a host of other sectors like real estate, are taking a bit of a back seat. Let's run you through some of the smart movers. Bank of India, Union Bank, MRPL, AB Capital, as well as BEL, Canara Bank, Apollo Tyres, they're standing out within the mid-caps. We're in conversation with Mahantesh Sabarad as well as Kunal Bothra. Mahantesh, let's understand what your outlook is when it comes to the entire FMCG basket. Owing to the kind of growth that we've seen from a lot of these FMCG frontliners, would you say that signs of normalcy returning, the overall packaged food segment growing smartly, all of this is likely to fuel growth going forward? And where is it within FMCG that you're seeking opportunity?
So the one good news for FMCG companies is that during the lockdown phase, they weren't able to reach their retailers and distributors in a large manner. And come January, come February, they are now able to reach their entire network in a way to the extent of 100%. For FMCG company, reach is what matters most, because through volume growth can you expect better profitability ahead or margin expansion. So that's one great news that you have for FMCG companies. But along with that positive news, you also have this prospect of margins compressing because of rise in commodity prices, be it oil, be it even vegetable oil. I'm talking about crude oil versus vegetable oil. Virtually most of the commodities that go into making an FMCG product is going up, and the ability to raise prices doesn't exist at this juncture today. And they eventually would be able to raise prices to recoup the margin losses. So having said that, I think the only positive therefore is between these two things, the reach that they are able to manage, 100% reach that they're able to manage versus the margin compression. They're still on the better side because the volume is still growing quite well. So would generally tend to remain positive, a little slight overweight on the FMCG sector relative to the others, and would look at those FMCG companies which are more into everyday essentials, I would say, rather than the newer product lineup kind of companies. So more on everyday essentials, not personal care. So it will be more like on home care than personal care. So home care product kind of companies would do better relative to the others.
Okay, fair enough. Kunal, where do you stand on the charts of Motherson Sumi as well as Apollo Tyres?
I'm completely amazed to see the stock price action. Frankly, for Motherson Sumi, I remember I think post just pre-result, the stock was at 175 or 185 approximately, and we were discussing that probably if the results don't disappoint, then the stock could aim towards that 200 mark. But the way the stock has broken past about that 200 level, it's now indicating something much more bigger, at least on the chart. So this move which you have seen past those 200 levels sets into a new range and new domain for stock like Motherson Sumi. And I believe that there could be now a stronger possibility that this stock would be also one of the few auto and auto anch stocks which have been more beleaguered, more underperformers, which could probably try and play a catch up. So I think Motherson Sumi has come back into that league, and I think post results, or rather the results have added as more of a catalyst towards this phenomena for the stock. Would be surprised that the stock may scale past about that 280, 300 levels as well over the next couple of quarters. For Apollo Tyres, I think it's a very interesting chart because it's not just that this stock is the only stock which is looking attractive. You look at many of these tire stocks, whether it's JK Tires, SEAT, Apollo Tyres, MRF. Many of these stocks are looking so strong on charts. Apollo Tyres has changed, rather broken past about its resistance above 200 levels. That is now acting as a support. So I think if I'm not wrong, there were almost two tests or two retest of that support zone of 200 level for Apollo Tyres, and on both these occasions, even when the markets were volatile, even though if there was a single day or 2 day correction on the indices, this support held on for the stock, which means now I think the stock would gradually come back into a groove. And I think 280 to 300 levels for Apollo Tyres as well seems to be a possible target, provided the time horizon could be a bit more longer. And I think this stock may probably be more volatile as compared to just as a comparative Motherson Sumi.
Mahantesh, what's the outlook when it comes to the entire telecom basket? You've of course got Bharti Airtel in focus on their strategic plans for the future, the subsidiaries, the shareholding structure. What are you expecting from that board meet, and how are you looking at also the peg that we're picking up, the PLI within the telecom sector, because that wouldn't just benefit some of these telecom players, but it could positively impact stocks the likes of Tejas Networks, D-Link, some of the telecom hardware providers as well.
First thing first, I think the prospects of the telecom companies are directly linked to the ARPUs right now. The ARPUs have been traditionally been weak, but then you will notice that the last 5 or 6 quarters, there's been a quarter-on-quarter increase in the ARPUs, even from a player like Vodafone who is losing subscribers. So you have the industry as a whole doing relatively better on the ARPU metric, which is the first and foremost thing to look for in telecom companies. The second thing is that given the rise in the ARPU, quarter-on-quarter rise in ARPU, are these companies generating enough cash to take care of their debt on the balance sheet and still leave some room for future expansion, in fact, future technologies such as 5G technologies? And there we find that most of these companies have done relatively better when it comes to the balance sheet metric of their net debt to EBITDA metric, or even from a debt to equity kind of metric. So these are now comfortable, I would say, though they are not out of the woods. These numbers are comfortable relative to what they were in the past. So their future growth ahead into newer technologies, particularly 5G, will be better enabled because they will be able to raise financial resources adequately for that growth. That's what we sense. But when you ask specifically about this PLI scheme for telecom companies, of course, the PLI scheme is essentially meant for encouraging manufacturing activities in the country. Telecom is a service activity, so therefore it is the back end of the telecom services, which is on the hardware side, is what one can expect certain PLI incentives to be offered. But I'm not too sure whether that will really work for the industry, who is crucially dependent both on technology as well as critical component inputs from abroad. That's something we need to be cognizant of while designing a scheme, because we cannot leapfrog into technology space just like that overnight. It takes huge amount of resource mobilization as well as technological background work to be able to do that. So I don't think that is going to affect the telecom company per se. That means the introduction of a PLI scheme in whatever fashion is going to affect the telecom companies. I'm just want to look at how the companies are able to raise better resources for newer technologies. Bharti Airtel is talking about reorganizing its structure so that it becomes leaner in certain pockets for it and makes it easier for them to raise money in that subsidiary, then it helps. So I think all these moves that the telecom companies are doing will have a positive outcome going forward for shareholders.
Mahantesh, what's your own sense on what could be the next possible trigger for Reliance? Besides playing catch up to the rest of the market, where could the next fundamental trigger really come in from?
So there are two things to look forward to when it comes to Reliance. Number one is what happens to their 5G play as we go forward. What is the strategy that they have there? We need to closely watch how would they deploy their 5G technology and at what price. And secondly, the same and plain and simple thing that I argued some time back, ARPU. Your ARPU for telecom companies has to rise. And we sense that there would be a substantial price increase that will be taken up by the telecom companies in the next 1 or 2 months. Reliance apparently should lead that price increase is what the typical expectation is. You will notice that it's only the telecom vertical which will drive Reliance ahead, as the way we see it. The petrochemicals or the oil to chemicals business that they have is on a steady state. I would say rising crude oil prices is something which negates the effect of their business temporarily for a while, but after a 2 month, 3 months lag, they would be able to get back into that profitability zone in terms of JRM margins as well as the EBITDA margins that they have in the petchem side. And when it comes to the retail vertical, right now there is nothing much to hope for. They have signed into the deal with Future Retail, but it's slightly under litigation. So unless that litigation is completely over, the progress thereof, the deployment of their strategies on the retail side will be held back a bit. So I would guess that news related to telecom sector is what will keep driving the stock up. One disclaimer here, I own the stock.
Mahantesh, great to have you on the show. Kunal, we'll let you as well go on that note. See you tomorrow morning. We're going to take a very quick break on that note with news that we're still favoring the declines, 117 points lower for the Nifty futures.